Alright, so in this video, I'll be doing an application question on IAS1, right? So how will IAS1 be tested? Now, normally it's like these type questions, right? Where there'll be a small like mark, like 5 marks, and for this whole question, right? So, previous client Nobalandi called to thank you for your professional service. She mentioned that she had received a copy of her business financial statements and they showed a strong profit over just a 3 million. So you are an accountant, you are a business. You have a client who told you that, listen here, you must, as an accountant, prepare her books. So you gave her the financial statements, and in that financial statements have a strong profit of nearly 3 million rand. So on her income statement, her net profit is 3 million rand. The large profit was driven by credit sales totaling 4.5 million to her only client, Mivezo Spa. Okay, so basically, her 3 million rand profit, right? The reason why it's so high is because she basically goods were bought from her on credit from this person, right? Movezo Spa had not settled the amount owing at the year end. Alright, so what does that mean? It means it's a debtor, right? So this person is a debtor that bought some goods, a lot of goods, 4.5 million goods. He's a debtor. So straight away, if you had to record that transaction, what will it be? It'll be debit trade receivables, credit sales, right? So there's no actual money coming to your business, but your sales is going up because you're crediting sales, right? Why do we do this? According to the, I think what is called, it's called accrual concept, right? Accrual concept, or the cash base, accrual concept. I put it. Look at the comment section, the exact spelling of it, but I think it's accrual concept. So it's a concept in like IAS1, which says that you basically have to record all your income and expenses in the exact time period of when it's taken place, not necessarily cash. For example, if a debtor comes to my business and wants goods and he owes me the next year, I still have to record that sale as if I got that sale. But I never received the money, but I still put it as a sale. Okay. Now she concluded saying, thank you for now. I will use this profit to buy the BMW 750 that I have been admiring for so long in cash. Now, you know IAS1, right? All income and expenses must be recorded in the same financial year. Accrual concept. So here she's telling you that, listen here, I got such a large profit over here. So let me buy a car in cash. But you know you never receive any cash because this over here, it's according to the accrual concept, it's not actual cash. Your net profit in your income statement is not actual cash. You know what I mean? Because according to the concept, you recorded a sale, but you never received cash for it. It's still owing for the year. So net profit doesn't tell you how much cash is in the business. You see what I'm saying? Which financial statement will tell you how much cash got in the business? That'll be a cash flow statement, right? But we're not doing it now. We'll do it later on. Okay. So comment on the statement clearly indicating whether in accordance with the conceptual framework do you agree with the statement above. So obviously do not agree, and you mentioned this whole concept, right? So here's a memo. So let's open up the memo and see what they're saying about this thing, right? Okay, so there we go. You get 5 marks for this, right? The profit is a residual after deducting expenses and income as determined by the accrual base of accounting. Another way to say it is the net profit in the business is by taking income minus expenses, and all this is recorded according to the accrual concept, accrual base of accounting. Oh yeah, they are accruals. I was right, accrual. Now, that's number one, you get a mark. Then you have to say, it is therefore not necessarily mean. So now you have to explain why do you disagree. It is therefore not necessarily mean that the profit is cash that can be used by business. 100%, I told you. The net profit that business makes is not necessarily cash. Income expense are not necessarily recognized when they result in the flow of cash. I told you, for example, if a debtor comes to your business, you record that as sale. But that doesn't mean you got the cash, because that was a debtor. He'll owe you that money next year. Income are recognized when earned, and expenses are recognized when they occurred. So income are recognized when they earned, and expenses are recognized when they incurred. Hey, that rhymes. Yo, that's good lines whoever wrote this memo. And anyway, not the point. The point is, it makes sense. whenever income or expenses happen in your business, you record it for that time period, right? So that is why I say income is recognized as soon as they earned, not necessarily when you get the cash from the income. You get what I'm saying? Therefore, you conclude Noblani is incorrect that say that she will use the profit to buy the 3 million rand car. It does not equal to cash, so really she doesn't have the cash that can be used to purchase the MBW. So yeah, that's basically it's this whole IAS1 we're talking about the accrual concept. So if you look at IAS1, there's like concepts. So if you just know those concepts, see how they just apply the whole accrual concept from there. So that's how IAS1 is tested. Yes, so don't forget to like and subscribe. And yeah, that's it.